Hello everybody, welcome to 7. Our topic is the stock selection model based on dividend yield. Our presentation is basically based on 5 parts. First part is background, the big picture. So we know the dividend is an important component of return of investment, and dividend yield is an important index measuring a company's current value. So high dividend means plenty of free cash flow, stable operation, and a reliable expectation of profit for the value investors. So those who is consistently pay high dividend tend to be good companies and are usually favored by the value investors. The objective of our project consists of 2 parts. The first part is we want to analyze dividend yield of different companies and industries in Chinese A-share market and answer the following questions. The first question is, what kind of industry have higher or lower dividend yield? The second question is, what type of company have higher or lower dividend yield from the perspectives of the market value, ROE, retained earnings, debt to asset ratio, and ownership concentration. Secondly, we want to analyze and backtesting whether dividend yield factor is a proper factor concerning stock selection after adjusting for the multiple factors. We want to figure out the type of industries or companies that are appropriately to be used dividend yield for pricing and whose information coefficient of the dividend yield factors is high. And furthermore, we will try to use dividend yield factors to build a stock selection model on a select asset pool. It can help us to optimize the parameters in the model and analyze the performance of our model. The second part is motivation. Because we are interested in this topic for 2 reasons. The first reason is dividend yield is a good measurement of a company's value. The high dividend yield indicates that the company operates profitably. Its management team has a positive expectation of the future operation, and the stock price of the company is relatively low. The second reason is more and more investors are returning to value investing in an A-share market since the end of bull market in 2015. The A-share market have entered a secular bull market. So the profitable and undervalued blue chip stocks are favored by the investors. So these investors are essential for a portfolio due to their high dividend, stable growth, and good cash flow watching. So let's see some achievement review. We know the GEM's investment philosophies. The stock selection strategy is divided into the value of stock selection strategy and growth strategy. The project focuses on the study of its value of stock selection strategy in the A-share market, and one of the essence of the investment is, the high dividend yield is very effective for large market stocks, but it doesn't apply to small cap stock at all. And we know that from the Huatai research, we know that its report on the A-share market empirically and find out the relationship between the dividend yield and long-term yield. The combination of high dividend yield usually have higher long-term yield, and the combination of high dividend yield is more stable, and also is it's a significant price and have a performance advantage. Then let we search some data. So download full line history data from 2010 to 2017 through the Flash, Wind, and other market software download. We can process analyze data using our Excel and other software. So we can use this software to to demonstrate or to distinguish the stock market and find the stock we want to use. Finally, let's hypothesis. The blue chip stock including bank, non-bank, retail, and transportation stock with stable profitability enjoys the highest dividend yield and the highest dividend payout ratio by using such high cash flow as. The highest dividend yield of high-tech growth industries such as companies like semiconductors have the lowest dividend payout ratio. And also large market share, maybe high ROE, high profit ratio, low debt ratio, and high equity concentration, dividend yield, enjoying a high dividend payout ratio, since companies meeting these conditions often have stable revenue and cash flow. And lastly, the pricing of the dividend yield depends on the life cycle of the industry in which the stock are located. Companies in this stage value have a very profitable and stability of themselves. And reviewing from the definition of the dividend yield, it puts more emphasis on the stable profitability of the company. So we speculate that the companies in mature stage are more suitable for valuing with dividend yields. Lastly, backtesting results. After optimization of the parameters such as the frequency of stocks exchange, a quantitative model with a considerable market return will be obtained. And after we use the backtesting results, we can demonstrate the high dividend yield company will be a good company to choose in the Asia market. That's our presentation. Thank you.